And welcome to the Aaron Katzman Show. I'm host Aaron Katzman. We speak to your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the podcast and to the YouTube channel. So I want to speak to you about the little secret of growing wealth, of having a secure financial future. You know what the word's one word? What's the word? Patience. I want to speak to you today about the need for patience, and that is the way, ultimately, for you to grow your wealth and, like I said, have a secure financial future. Now, people who know me know that I don't always have a lot of patience. I lose patience pretty quick for things I don't like so much. But when it comes to investing, you need to have patience. I was listening to a podcast with Joel Greenblatt, who, amongst other things, has what's called the magic formula. He's what he calls, he's not a value investor. He's like a valuation-based investor. And he was talking about that when he got started. Ultimately, he had amazing investment returns, but every 2 to 3 years, he would have years where he lost 20 or 30% of the value of his portfolio. But he believed in what he was doing, and he stayed the course, and ultimately, he became the legendary investor that he is. Now, I'm not going to tell you now that you should, go out and buy 3 or 4 stocks after you research them and, have a 7 or 8 stock portfolio and let it run and see what happens. I'm not saying to do that. In fact, he, along with others like Warren Buffett, said for most investors, you should just buy an index and link yourself to the index and let it rip, and you should do just fine. But one of the other things that he says in there is that it's important that you have to realize that we're in a situation now that we've really not been in for a long time. And what's that? That what we call the Magnificent Seven or the Fab Seven, right? Microsoft and Google and Amazon and Apple and Nvidia and what have you, Meta, Facebook. These companies have been off to the races now for a few years and really, really pulling the stock market with them. He says that's an aberration. We have really rarely seen in the history of stock markets where the biggest companies continually pull the broader market forward. We do know that just a handful of companies, whether it's 4 or 8%, I've seen different numbers on that, but most stock market returns come from a handful of companies. It's not always the biggest ones, but it's from 4 or 5%, of the companies that make up the stock market actually provide most of the returns in the stock market. So why do I say one needs to have patience? Well, there are a few reasons. First of all, because things don't always go up in a straight line. Sometimes markets go down, and they can go down for multiple years, right? We even, the beginning of 2000, we had what was called the lost decade. Nobody even remembers that now, because things, markets have zoomed, even if you invested at the end of 1999, you would have done really, really well, even though 10 years, which is a lot of time, the market did nothing. So you have to keep in mind that markets do go down, and you can't get all flustered and start making changes. And wow, I had a bad year, so I'm going to change everything. Just stay the course, right? Be patient. But the other thing I think where you need to be patient is going back to what I said before in terms of people sometimes call me and they say, well, why do we own stocks in smaller companies or mid-sized companies? Why do we have exposure to international companies, non-US companies? Why don't we just put all of our money, for example, into the S&P 500, the largest companies? And I think the answer is, from what I said, it's not always the case where the biggest few companies pull the markets and provide almost all of the returns for the market, right? Generally, different asset classes also have their day in the sun. It might be real estate, it might be mid-cap stocks, small-cap stocks. There are times where utilities outperform, right? Even sometimes, occasionally, bonds outperform. And that's why we have a diversified portfolio, because at the end of the day, we don't know what's going to happen. But statistically, we know that sometimes, emerging markets do unbelievably well, and then they go dormant for 5 or 6 years. Sometimes, developed market companies do really, really well, and then they don't do anything. Sometimes the S&P 500, the biggest companies in the world, do well. Sometimes, like I said, small cap stocks do unbelievably well for a couple of years, and then they fall down, right? It's like a yo-yo. There are these charts you can find, if you Google search it, asset class investment returns, something like that. It's a multi-coupled chart. You'll see that rarely do the same asset classes continue to be the best performing assets over the long period of time. It rarely happens. In fact, almost never happens. You might get 2 or 3 years of top performance, but then it drops like a yo-yo, right? Things go up and they go down. It goes up and goes down. And that's why you should be diversified. And that's why you need to have patience. If you have that diversified portfolio and you say, well, I should put all my money in the S&P 500. Well, the answer is probably no, you shouldn't. Okay, you should also have exposure to small companies, mid-sized companies, international companies, because over time, again, time not measured by a week and a half. I know we live in a society, in a culture which measures everything instantly, but that's not how to grow your wealth and become financially secure via investing. Via investing, you need to have patience. Don't think that you're always going to find the gem. Don't think you're always going to hit the grand slam when it comes to investing, right? If you stay true, singles, walks, hit by pitches, right? We just finished the World Series, right? You just want to get on base. You want to be in the game. And if you do things smartly, at the end of the day, things generally, statistically will work out. But don't try and be too smart. Don't think, oh, I know. Stick to the diversified portfolio because, like I said, generally each asset class will have its day in the sun. That's just what's happened historically. I don't know what's going to happen in the future, but if we learn from history and we use history as a guide, right? Well, that's what we're supposed to do. We're supposed to learn from history. That's what happens, right? It's not always the 5 biggest companies or the 10 biggest companies are what, and if you invest them, that's what's going to make the difference. No, it's probably best for you to have a diversified portfolio with different asset classes. You don't have to go crazy, right? I'm not saying, that you need to own everything. I see portfolios where people own, not only do they own stocks in the S&P 500 and then mid-cap stocks and then small-cap stocks, but then they'll have like 12 different sectors, okay? They'll have semiconductors, they'll have financials, they have utilities, and they'll have home builders, and they'll have everything. I was like, well, why do you do that? You already own all those things in the broader based ETFs or index funds that you already own, right? So there is too much of a good thing. It becomes redundant. There's a lot of CYA, cover your derriere, as you say in this business, that you don't need. But you can certainly put together a well-diversified portfolio with maybe 4, 5, 6 different asset classes, and you're good to go. Okay, so patience is a virtue, especially when it comes to investing and growing your wealth. Don't freak out if something that you own, especially if it's like an index fund or whatever, doesn't have an unbelievable year, doesn't have an unbelievable 2 or 3 years, because at the end of the day, probably a good chance it will have its day to shine. Okay, so you want to stay diversified, keep it simple, no question about it, but also be patient. If you have a bad year or a couple of bad years, but you're owning good quality investments, stay the course. If we've learned anything from history is that can happen, but that ultimately things will work out. You've been tuning into the Aaron Katzman Show. We speak about your life and money and your investments. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. If you think somebody might find this interesting, there's no law that says you can't share it with them. Go ahead, please, please, please share it with them, okay? Thanks so much for tuning in, and we'll speak to you soon.